Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday, 2nd of October. It's been a pretty hectic and tumultuous 24 hours really for the dollar. What we've seen is a sharp fall back on that ISM manufacturing data for the US, which really did fall away quite sharply, and we can see that that ISM data is actually the lowest since 2009 now for the manufacturing sector, below that 48 figure felt in 2016, and that really did send shockwaves through markets, certainly for the dollar, but also as the dust has settled, I think it's going to continue to be reflective of how the trade dispute is affecting the global economy. And generally what we tend to see is that the US dollar sort of has been coming out on top in that whole argument, where the US economy seemed to be best of a bad bunch really. And what we saw yesterday was that Treasury yields fell back, stabilising a little bit today on the 10-year and the 2-year, and equity markets quite sharply lower as well. Volatility on the VIX is now at levels not seen for about a month really. As that volatility is rising, that comes hand in hand with equity markets falling generally. And we've seen a bit more of a move back into safe havens. The dollar yen was up around 108.50 area yesterday. It sort of pulled back from there. Gold rebounded about $30, although again has stabilised. I'll talk about the technical implications of those two charts in a bit. Interesting to see the oil price once more falling away. A little bit of a rebound early doors today, but again, is it a rebound that you'd be trusting? I'm not sure, given the fact that risk appetite is so negative at the moment, how a rebound in oil can really take hold. You do though have the EIA inventories today to contend with. So generally speaking, we've seen that sentiment is pretty negative. The dollar strength, which has been a feature of trading in recent weeks, sort of looking to come back into play once more. Now, in terms of data points today, construction PMI for the UK at 930. It's about 7% of the UK economy, so it's not a massive impact, but it is a bit of a gauge as to how Brexit is still a key factor. 45, so really strong contraction in the UK construction sector there is the expectation. Now, 1:15 this afternoon UK time, you've got the ADP employment. Now, ADP didn't really act as a significant gauge for the payrolls last week, but certainly ADP employment 140 would suggest that payrolls is not going to be all that impressive this week, and that is at 1:15 today. Now, we've also got another Fed speaker, John Williams, today. He's considered to be a centrist, so I would say that he could well be someone that is a bit of a gauge for how the FOMC is moving. Now, my chance today, Aussie yen. I always talk about Aussie yen given the fact that I see it as a risk appetite gauge, and falling away sharply yesterday. Yen strength, Aussie weakness. We see Aussie yen that is now closed at 4-week lows. Certainly looks as though it's under pressure, falling away again today. So rallies, I think, are a chance to sell. Breaking down below the support band, you could argue 72.40, 72.90, that had been holding over the last week or so, breaking down sharply there, and again using that as a basis of resistance on the rebound today. 72.50 area as the rebound, falling back towards 72 figure. Now, breaching to the downside, you would suggest 71 figure area back in line as a next real test, that early, sort of that late August, early September support area. But 70 figure, that key August low, does pretty much come back into play. Look at these momentum indicators. RSI falling at 38, so confirming the breakdown. MACD lines continuing lower. Stochastics crossing lower again, so there is downside potential in all these indicators for further weakness. You can see on the hourly chart the resistance building up at 73.30. 1, 2, 3 occasions in the last week or so has been tested as a basis of resistance. You could argue this is a range breakdown targeting 70 pips of downside. 72.50 minus 70 pips is 71.80 as a target for that breakdown in the coming days, but certainly I think 71 figure area is likely to be seen as a next target area. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and also go to our website where you can sign up for our webinars.